Hey everyone, and welcome back to the Vanilla Well. Today we have a hot topic on the agenda that everyone seems to be talking about. Trump 2.0. Yep, that's right, the big guy is back for round 2, and if you're a Canadian investor who has or is planning to invest in the US or Canadian markets, you need to know what that could mean for your portfolio. Alright, so why would we even care about a shift in the US politics? Well, the US is not just a random country. It's the largest economy in the world. Whatever happens there doesn't just stay there. So yeah, Trump coming back could mean massive shifts for Canadian investors. So put your focus hats on for the next few minutes because understanding this could be make or break. Here's the roadmap for our discussion today. First up, we'll talk about what the economists are referring to as Trumponomics 2.0. Here we'll talk about the effects of Trump's economic policies. Secondly, we'll move on to Trump's America First agenda and his love for tariffs. Then we dive into expected regulations, or rather deregulations, what this means for the future of innovation and whether crypto as we know it can become mainstream. Then we will summarize the main impacts on Canada and Canadians. And finally, to wrap things up, we'll do a sense check on stocks and sectors that you should be on the lookout for with Trump 2.0. So our first topic today is Trumponomics 2.0 and what economic policies we can expect. But before we get into that, what exactly are economic policies? Think of economic policies like the rules in a game. They dictate how the game is played, who has a better chance of winning, and how everyone gets their share of resources. Basically, think of how money flows, who gets taxed, what businesses can and cannot do, and how the government spends its money. Economic policies can affect everything from the cost of living, think about how much you pay for rent or a new phone, to the value of your investments like your ETFs or stocks. Now that we're all on the same page, let's jump in. Let's start talking about taxes. During his first term, Trump slashed taxes, particularly for corporations. He slashed the corporate tax rates from 35% to 21%, which significantly boosted US corporate profits and stock prices. We also ought to talk about how Trump offered repatriation benefits to companies. What this means is that he told companies that if you're an American company, bring back your overseas profits and we will charge you reduced rates. What's his thinking behind this though? Well, lower taxes means businesses can grow, they can hire more Americans, and boost profits. And you know what that means? Higher stock prices. For Canadian investors holding US stocks or ETFs, this could be a big win. Now, what about trades and tariffs? Well, Trump's first stint as president was filled with efforts to limit reliance on other countries. This meant tariffs, trade wars, and a focus on domestic production. Now, Trump has stated that he is going to be placing 60% tariff on all imports from China, as well as a universal tariff of around 10 to 20% on all goods coming into the US, which could include Canada. Well, will it happen again? You can 100% bet on it. Now, in fact, Trump's gone on record saying that, to me, the most beautiful word in the dictionary is tariff. As an investor, keep an eye on the risks that this poses on anything reliant on international supply chains. If you're an investor in import-heavy industries, you need to assess the risks of tariffs. What about government spending and debt? Well, Trump's first term was marked by huge spending, more on defense and infrastructure. More spending could drive inflation and make the economy hotter, which could affect interest rates. But given the Trump mindset, this is likely to continue. Well, to understand where this mindset stems from, we need to look at Trump's pre-political stint. He's always been a real estate mogul. And guess what? Real estate is a debt-heavy industry. In fact, he has called himself king of debt. So his debt-heavy focus to govern the country is not at all surprising. As an investor, look for sectors with government backing, especially defense and security could be a good one here. Now let's shift gears and talk about a second pillar, which is the America First agenda. So what is the America First agenda? Well, it's exactly what it sounds like. Putting America and Americans first. Well, think of it like a game plan that Trump will use to focus on making the US economy stronger by putting America's needs and interests above those of any other countries. Let's talk a little more about Trump's take on US jobs then. Well, one of the main pillars of Trump's America First agenda last time around was bringing manufacturing jobs back to the US. These jobs had been moving overseas to take advantage of cheaper labor. So what did Trump do? Well, he offered tax incentives to companies for producing goods domestically. More businesses back home meant more jobs on offer for Americans. Expect Trump to push further on this with possible incentives for manufacturing and energy-focused industries. How about immigration policies? Well, tightening up immigration rules gives American citizens priority when it comes to jobs and government services. Trump has been known for his hardline stance on immigration and border security. During the campaign, Trump pledged to conduct a mass deportation of millions of illegal immigrants living in the United States. Now, tighter borders could impact sectors reliant on low-wage workers. How about legal immigration though? Well, while Trump had said during his previous term that he's not opposed to legal immigration, he actually did cut back on legal immigration as well. Not to say he will do it again, but irrespective, Canadian investors definitely need to be on the lookout for any hints about impact on immigration-reliant sectors on Trump's social media. On the other hand, sectors focused on domestic labor or manufacturing might be great ones to dive into. Let's now get into regulations or deregulations, what this means for innovation, and is there going to be a crypto mayhem? Trump's focus on deregulation resulted in the rollback of many business and environmental regulations. This time, Trump has pledged to take this a notch further. From an environmental standpoint, his goal is to achieve quote-unquote energy dominance. This he plans to achieve by increasing fossil fuel production and lowering energy costs. And so you could see deregulations on emissions from power plants, easing restrictions on oil and gas drilling, and possible withdrawal from the Paris Climate Agreement again. From a financial services standpoint, Trump is expected to continue his previous efforts to loosen regulations. This could mean rolling back parts of the Dodd-Frank Act, which means fewer banks could be subject to stricter federal oversight, giving them more autonomy to carry out better business. Another industry that Trump administration is likely to pursue is healthcare. Trump has been a proponent of private health. He could also make an attempt to modify the Affordable Care Act, which would affect premium payments. Trump also promoted Medicare Advantage plans, which again reflects a pro-private sector stance. Now, although details are a little hazy, Trump has elected Elon Musk, who Trump has called quote-unquote super genius, and Vivek Ramaswamy to lead the Department of Government Efficiency, or DOGE. This would be operating outside of the official government, but irrespective, this could have a huge impact. Their mandate includes dismantling government bureaucracy, cutting wasteful expenditures, and slashing excess regulations. Now, what sort of regulations can you expect to be slashed? Well, AI and tech would definitely be on the radar. Policies favoring innovation over regulation. For example, reduced oversight of tech companies, which could potentially lead to a more hands-off approach to AI development. Also, things like Tesla's proposed robotaxi could see lower barriers to entry. In fact, Donald Trump's transition team has reportedly been planning a federal framework for fully self-driving vehicles. This could fast-track self-driving tech across the US. Now on the topic of crypto regulations. Under Trump's first term, we saw zero love for Bitcoin and other cryptocurrencies. He was pretty vocal about it. But with Trump 2.0, well, there's a high chance we could see the government take a more relaxed stance on crypto. In fact, he has said he wants to make America the crypto capital of the planet, and Bitcoin the superpower of the world. This broad promise suggests a generally favorable regulatory environment for crypto businesses and investors. Not only that, Trump has promised to write new regulations by people who love your industry, not hate your industry, and announced plans for a crypto advisory council during his campaign at the Bitcoin 2024 conference. Trump has also proposed creating a national Bitcoin reserve, positioning it as a core component of US economic strategy. Also, Gary Gensler, the current chair of the SEC, who had taken a strict stance on cryptocurrency regulations, has confirmed that he will be resigning on 20th January, which the crypto community is extremely excited about. And guess what? Money has poured into crypto assets since Trump's victory. Bitcoin is very close to the groundbreaking $100,000 for the first time ever. So overall, definitely get ready for some drastic updates on crypto. And lastly, how does Trump view green policies? Well, to put it mildly, let's just say not with love. In his first term, Trump rolled back environmental regulations and reduced support for renewable energy projects, favoring fossil fuels. This is likely to continue. With even less regulatory oversight for industries like oil, gas, and mining, ESG-focused investors definitely need to be on the lookout. Now let's talk about Trump's impact on Canada and Canadians. Let's start with tariffs. Well, guess what? Canada sends over $600 billion worth of goods to the US each year. So any sort of tariff for Canada would have a humongous impact on the Canadian economy. In fact, experts believe that while a stronger US economy could initially benefit Canada, new tariffs or restrictions would likely reduce the flow of capital into Canada, which could mean more trouble for our economy. Obviously, this is all dependent on whether Trump actually follows through on his threats. But if he does, as a Canadian investor, 100% something you need to watch out for. Next up, immigration. Now, as we said earlier, Trump plans to deport millions of illegal immigrants. But what exactly does this mean? there's a real possibility that a large number of people could attempt to seek refuge in Canada. Our federal government has already reduced the number of legal immigrants we admit each year to ease pressure on the housing market and social services. So how would we manage an influx of refugees? What would be the strain on our healthcare system, social services, and housing markets? As an investor, for you it's worth keeping an eye on sectors that might feel the squeeze, like real estate, housing, and companies dependent on labor-intensive industries. Another thing you need to watch closely is the currency market. Now, trade tensions could weaken the Canadian dollar. In fact, US dollars to Canadian dollars ratio surpassed 1.4 for the first time in over 4 years. So suppose currently the US dollar is worth 1.4 Canadian dollars. That means if you want to buy a share of a US company which is worth 1000 USD, you would have to pay 1400 Canadian dollars as of now. But if 1 USD becomes 1.5 Canadian dollars, and let's really hope it doesn't, you would now have to pay 1500 Canadian dollars for the same 1000 USD worth of shares. It's something to look out for. Also, a weakening Canadian dollar can mean that Bank of Canada could cut rates more aggressively than the Fed, widening the interest rate spread and favoring USD. Lastly, housing. Real estate websites in Canada are already seeing interest from the US users. If this interest turns into real action, especially among high-income buyers, it could drive up demand in the Canadian housing market. And if the Canadian dollar becomes weaker, Canadian properties are more affordable for American buyers, effectively making Canadian real estate cheaper for them. This increased demand could put upward pressure on housing prices in Canada's major urban centers, especially in cities like Vancouver and Toronto. Now it's time to absorb everything you've seen so far and talk about the sectors and stocks to watch for as we dive into Donald Trump's second stint. Let's start with energy. Trump has always been a pro-oil and pro-fossil fuel guy. With Trump 2.0, expect continued pushback on environmental regulations, giving more room for oil and gas to grow. What does this mean for you as an investor? If you're looking at energy stocks, keep an eye on companies involved in oil exploration and production, particularly those in the US that could benefit from looser environmental restrictions. Additionally, companies focused on pipeline infrastructure could see growth as well, as Trump's drill baby drill approach could boost domestic production. As part of the America First agenda, to keep more jobs and production in the US, Trump will focus on revitalizing American manufacturing. As an investor, companies in any sort of manufacturing sectors like automotive, steel, construction, etc. could see incentives and support for reshoring production. Now let's talk about defense sector. Well, Trump has consistently supported increased military spending. As an investor, you should know that defense companies with exposure to US military contracts are a solid investment. Now let's talk about financials. Trump's deregulation of the financial sector during his first term removed many constraints on banks, and we saw strong stock performance in the banking sector. Under Trump 2.0, financial institutions are expected to expand their operations and increase profitability. As an investor, look into banks, particularly those with significant US operations. Also, look for financial services firms offering insurance and wealth management. Lower taxes and a thriving economy could lead to more investments and higher demand. Now the big one, tech. His administration has been very supportive of domestic tech growth. As an investor, any company focused on cloud computing, AI, and even crypto would be great investments. Government contracts in tech sectors like tech defense and cybersecurity could see upside as well. Alright folks, hope this helps you, and just remember, as an investor, whether you're looking forward to it or bracing it, one thing is certain: we should get ready for an eventful 4 years of Trump 2.0. That's all for now. Thanks for watching, and if you're looking forward to more content, please give a thumbs up and hit that subscribe button. Until then, as always, keep it simple, keep it vanilla.